Hey guys, Max Convexity here. Let's talk some basic option strategies. I guess this is class number 4 or 5 in the basic option series. Some people asked me to make this its own playlist, and I will. Starting today, I'm going to put these on the basic option lesson playlist. I couldn't figure out how to put the old videos on that playlist also, but I'll figure it out. But this one will definitely go on a new playlist. So first, let's start off with yesterday's. Let's see what's going on with yesterday's position. We're using option strat to paper trade. So we can look over here at save trades. And there we have it. Yesterday, just to refresh everyone's memory, we bought 5 puts in Tesla. Tesla has earnings after the bell today, and these are a hedge in case Tesla misses earnings and Tesla goes down a lot. The idea is we can offset some of our loss if we have Tesla stock. And even if we don't have Tesla stock, maybe we just want to make a bearish bet on Tesla. This would be one way to do it. Probably not the best way to do it. This is better if you actually have Tesla stock because it would offset some of the decline in the stock. And we talked about that yesterday. So let's look at the trade itself. All right, here's the trade's profit graph at expiration, but here's the profit graph right now. This is the price that Tesla is at right now, $9.90. So right now this trade's about $12 underwater. We paid 25 cents for it yesterday, and the bid's 20, the ask is 25. But anyway, look at this. So we could slide the date forward. So that's Wednesday. So this is what it looks like tomorrow morning. So this will be after Tesla reports. You can see if the stock doesn't move, we'll even have a further loss. And if the stock doesn't move or goes up, we'll lose all our money by the time of expiration. Like I said yesterday, this is just a couple of day play. We're hoping for we aren't really hoping for a Tesla miss, but that's what we're playing for. So if Tesla misses and it causes Tesla to drop, so here's tomorrow. Let's see. Here's tomorrow morning. So say if Tesla dropped to $9 after Tesla misses, it'd be a $139 profit for these 5 options. If Tesla drops to 8, it'd be a $441 profit. And of course, if we have 500 shares of Tesla, like in the example, we would have losses in our Tesla shares, but this would offset a portion of them. And of course, if it goes to 7, God forbid, I don't think it's going to do that. I really think it's going to stabilize. Maybe go down one more day and then turn around and go back up. Buy the rumor, sell the news is what they always talk about, but they also sometimes they do the reverse whenever bad news might be coming out. In any event, that's yesterday's trade. Now let's look at today's trade. So the trade I picked out for today, and I'll tell you the rationale for it. Okay, the NASDAQ is just on fire today. It's been on fire a lot lately. It had a huge gap. Like I always say, NASDAQ closed on its highs yesterday, and sure enough, that was telling us it wanted to go higher, and it did go higher this morning. But wonder if it's gone as high as it wanted to go. And I don't know that, but all I noticed, though, is look at this. VIX is the volatility index. I haven't talked about that much on my channel yet, but most people know what it is. VIX is a measurement of the 30-day forward expected volatility of the market. When the market goes down, volatility goes up. So if VIX is going up, it means these traders over the next 30 days are expecting maybe lower prices. They aren't always right. Then there's also something called the VIVIX, which is the VIX of VIX. So this measures the 30-day expected volatility of VIX options. Anyway, when the VIX or VIVIX is up, it's generally bearish, and when it's down, it's generally bullish. So something that a lot of traders look at is whenever the NASDAQ or the S&P is up at the same time the VIX is. There's a theory that option traders know more than stock traders, and the theory is if they're buying premium, they're doing it to ensure their stock bets, or so they're buying futures. Anyway, it's not supposed to be a good sign. So VIX is up 2.63%, and VIX of VIX, otherwise known as VIVIX, is up also. at the same time the NASDAQ is up. So that's not usually the way it happens. So if you're going to go with the VIX instead of NASDAQ, you're going to want to play puts in NASDAQ. You're going to want to. The VIX is just telling us that maybe the NASDAQ has gone too far too fast. Let's just put it that way. There's also a huge gap down here where prices didn't trade between 423 and 426 overnight. And there's another theory that gaps are revisited and tested or whatever. So I could easily see a return to 424, 425. Now, by tomorrow morning, or definitely by Friday morning. Now, the other thing we have to consider is Tesla is one of the biggest components of the NASDAQ index, and it has earnings tonight. So we've already got a hedge on Tesla in case Tesla misses earnings. But if Tesla misses earnings really bad, and I'm not saying they're going to, but if they did, I think it would make the NASDAQ pull way back too. And definitely we could expect to see 424 maybe by tomorrow morning, or certainly by Friday or something. So here's going to be our paper trade for today. We're going to buy puts in the QQQ. We aren't going to use the NDX. The NDX is too big for most retail traders. We're just going to use the QQQ because it's the contract size is more palatable to retail guys. So, and we're going to look at maybe trying to shoot for 424. Right now, the QQQ is at 428. So let's look over at the option table. All right, I've already got the option table opened up. Like I always remind everyone, calls are on the left, puts are on the right. Strike prices go down the middle. So we're going to look at, let's price this 426 option. It's going for 86 cents, and this expires 87 cents. And it expires on Friday. So let's put that into the call option basic calculator. The put option basic calculator. My bad. So we're going to switch the underline to QQQ. QQQ stock price was, I just forgot it. 428. All right. Strike price we were looking at, I believe, was the 426. We don't know the price on expiration yet. In the days it's 3 days. Because it's today, tomorrow, and Friday, or 2 days. I don't know if you call it 2 days or 3 days. The days till expiration doesn't make that much of a difference. All right, so we're going to go down here to the put option side. We'll just go with one contract this time. 5 contracts was imagining that somebody owned 500 shares of Tesla. This is just somebody that maybe is bullish on the market, but just wants to take a little, just wants to insure it a little bit or take a little gamble that it might pull back here, seeing what VIX is doing. So we'll just do one contract. Just, you can scale it to whatever your risk tolerance is. But, all right, so what was I going to look at here? We're going to look at this 426 for 87 cents, right? All right, so $4.26, the premium would be 87 cents. Okay, so immediately the computer figures out the break even. I had already figured it out in my head. Like I say, that should be automatic. Anytime anyone mentions an option trade to you, all you need to know is the strike and the price, and then you know what that gives you. So this is looking for a break even price of 425. And remember, looking at the chart, you have to compare it with what you think's realistic on the chart. I was thinking maybe 423, 424, filling the gap, so to speak. That's where the gap started. Might be a target for the next couple of days. Now, God forbid if Tesla misses earnings really bad, and I'm not saying they're going to, but if they do, it could cause the NASDAQ to crater, and maybe this will be the top for a week or two, and it'll do something like this, and it'll pull back more. We'll play that by ear. I'll show you how to handle that if it happens. But for right now, we're looking for a price tomorrow morning, 423, 424. So we're going to go back to to our thing right here, and we're going to just do price on expiration at 424 and see what that would do for us. It would make the option go from 87 cents to $2, giving us a $1.13 profit. 129%, not bad. A guy could short the same amount of QQQ stock and he would cost him $42,000 instead of 200, but he would make 474 instead of 113. I still like the risk reward better of the option guy myself. That's just me. I like leverage, and this is just a small bet. This, this could easily be wrong, and if it's wrong, we just lose $87. But if it's right, we could pretty easily make $113. And then I'm going to show you guys how to roll out. It might turn into, if Tesla really misses earnings, it might turn into it could turn into more of a bigger trade than that. But we're going to deal with that when it happens. But for now, let's just load this up into Option Strat. Okay, where's old Option Strat here? So let's just load this up and save it. So the QQQ, we want the expiration. I chose Friday just to give us a couple of extra days in case Tesla does really miss and this turns into a multi-day, where it pulls back 5%. That would be a dream come true for this option position. Or, that'd be what you want, but you can't really count on it. So we're going to just take it one day at a time. We're going to buy the extra days. I could go with just a tomorrow expiration, but I'm going to buy the extra day. So let's see, this was the 420, it was the 426, right? I have the worst short-term memory. Casualties of a misspent youth, I guess. All right, yeah, it's the 426 for 87 cents. Where the heck is this thing? All right, 426. And then we're going to put in the price of 87 cents. We're just going to assume that's our fill. In real life, we would try to do it for 84 or 85 and try to get a better price, but I'm just trying to show basic stuff here. Okay, so there we have it. So that's the position. Most we can lose is 87 bucks. We're looking for it to go to 424, maybe by tomorrow morning. So we're going to drag the thing here. Wednesday, so Thursday morning, Thursday 9 o'clock. Okay, so if we get a price of 424 by Thursday at 9 o'clock, we should have a couple $100 profit. The reason that's more profit than our spreadsheet showed, because my spreadsheet just calculates the price at expiration. You make 113 at expiration, but if we could get a quick little downturn here, we're going to make we can potentially make about twice that. And then we're going to roll out. We're going to take that profit off the table, and we're going to roll down to another option maybe for next week and try to turn this into a bigger trade, potentially. But for right now, we're hoping to make $200 by the morning. Or we aren't hoping to make it, but, we're going to, I guess we are hoping to make it. I hate to bet against the market. That's one thing that options are really good for. You could see the guy that was doing that just wants to short stock, he'd be in a world of hurt if it goes the wrong way. Wonder if Tesla hits earnings and, and this goes up, everything goes up tomorrow, then we're at 430. Well, we just lose 87 bucks. Okay, that's fine. We got 87 bucks we could risk. This poor guy loses 1.26% of his account. Well, I guess that's only 126 bucks. Anyway, wonder if it goes to 435. That was a bad example. Or 436. Then he loses $700. We lose 87. You get my point. All right. You get my point. So anyway, that's enough learning for today, I hope. Leave me comments if I missed anything or if I could do anything better. Like I say, I'm going to put this on its own playlist, and I'm going to try to put the other ones on that playlist as well. We're going to actually save this trade. And we're just going to put it in here as a downside hedge because VIX is up and it is concerning us a little. I know I spelled that wrong. I don't even care. Save trade. All right. I know how to spell concerning. My finger just hit the wrong key. All right. So something else I was going to show you. Look, I have an overlay of VIX down here, and I wanted to show you some other. It's not without foundation to be worried when VIX is going up at the same time. You can see right here, we went on this bull run, and VIX is coming down. VIX is the orange line, coming down, coming down, coming down. But then right here, VIX just suddenly turned up, and the market turned out a little bit too. But anyway, But VIX suddenly turned up. So that was a similar warning to what I'm seeing today. And then look, a couple of days later, the market tumbled, and then VIX kept going up. Then when VIX finally starts going down again, which happens right in here, that means all clear to buy. Because VIX going down is a bullish sign for the market. So boom, okay, all clear to buy, all clear to buy. Oops, right here we have VIX ticking back up again, right? Just a little bit. But then sure enough, the market comes down just for one day. VIX is ticking back up right here. And then the market a few days later had another little problem. But then anyway, after that, it's been all clear for buyers because VIX is coming down, 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 right until here. And this is just a blip on the thing. We'll see. This may turn into nothing. It's just something that I like to look at. All right, guys. Have a great day. Remember, not financial advice. Don't do this with real money. We'll do this for like half a year, and then I might use my real money if our paper trading shows profits. Trading's hard. It's not easy, especially when you're buying options. The odds are not in our favor on yesterday's trade or today's trade. Pretty soon, maybe by next week, we'll start making trades where the odds are actually in our favor. But for now, we're just going to stick with buying and see if we have the concept of buying premium. See if we have that concept down. All right, guys. Thanks for listening. Thanks for tuning in. Leave me a comment if you liked it, or if you didn't, tell me why, and I'll try to fix it. Thank you very much.